And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It's another beautiful day out there. And we got a lot to talk about, including the Federal Reserve documents that will be released on Wednesday at 11 a.m. It's the most important documents of the year. It is the summary of economic projections, which they've been lying through their teeth all year long. I don't expect them to do anything different. So this is where they talk about what they think the unemployment rate will be, what they think about the federal funds rate, what it will be going into the end of the year and early part of next year. So they're probably going to deal as much hopium as they can. However, they might give us a sticker shock with 100 basis point rate hike. So it is widely projected and anticipated a 75 basis point rate hike will come out of this meeting. It's 80% chance is being priced in right now. And on the other hand, 20% says, hey, we're going to get 100 basis point rate hike. They want to pull Volcker us or, shock the markets because inflation is heating up too hot and they've acted too slow for too long. And perhaps Mr. Chairman needs to put the pedal to the metal to fight inflation. And I do believe either way, whether it's 75 basis points or 100 basis points, the market's about to get wrecked. And mainly that's because of the weekly time frame, which we've been going over for some time. In fact, I actually wanted to talk about 6 days ago. I released a video about the spot price action, talking about the 4-hour time frame. And it was 6 days ago. I said, hey, look, if this region gets broken, any kind of a 4-hour closure below there, very likely we're going to get a move down to 18,500. We got to move to 18,300. And what did that look like? You can follow us on social. Here is your Tuesday morning CPI inflation report. How's it going to affect Bitcoin? I'm going to spell it out for you so you can't miss these moves. And here's what I would say. Any kind of a 4-hour closure below 20,600 is going to get you a move down to 18,500, which was the previous low. Any kind of a 4-hour closure below there is going to get you a move down to 16,400. So what is that? That is roughly a 35% drop, and I think it's highly likely, given that the stock market is dumping right now. The dollar's up 1%, gold and silver's down 2% today, and the NASDAQ is down 4%. So Bitcoin being a higher beta tech stock, it's going to do whatever the NASDAQ does, but more. And what are people preparing for now that inflation came in higher than expected? Yes, guess what? It's a done deal. Jerome Powell's going to raise rates another 75 basis points, bringing... Anyways, I really hate watching myself on camera anyways. So just showing that, not to say, oh, I predicted it, blah, blah, blah. All I did was use some basic TA and some basic levels that were major pivots on the market. As soon as we, in fact, took out this wick here, we got a massive move to the upside, and vice versa. I imagined as soon as we took the wick out again, we're getting a nice move to the downside. And 18.5, in fact, was that previous pivot right here at this wick right here. 18,560, close enough is close enough. And so what's happening, I believe the higher term timeframes are starting to take over. There's going to be a lot of volatility on the lower term timeframes because the liquidations are out there to get your money. And even if you have good stops in, very, very likely you're going to get stopped out or liquidated because of the volatility. So what do I have to say here? So basically, all these things are in place right now. You got the daily Stokes that are crossed down. Volatility is kind of flatlining right here. Does not mean we can't get more downwards action like we saw as volatility, in fact, declined here. you know, from 21,000 down to 18.5, that was a pretty, you know, good drop. But I do imagine CME looks a little bit more ripe. But let's first check out the 2-day time frame. And just so you know, these two lines right here is kind of the next projected bottom and the next projected top. I don't know if we're going to come in at 10.5 or 4,000. Really depends on what happens here in the next couple of days. But this is just to give an idea based on some patterns on what I'm seeing. But the 2-day will begin to cross down today below 19,700. We're currently sitting at 19,037. So one thing I am hypothesizing right now is a bit of a bounce before the meeting, kind of like the last farewell rally before it's down to doggy town. And why is that? CME, and the same thing is happening actually on, what is happening on CME is there's a gap here. And it's a little bit easier to see, but as I've mentioned many, many times, gaps like to get filled. They like to get tested. So I do imagine we get a bounce up to this gap here at 19,570. If we do get a bounce, right now we're going to cross down below 18,970, which it looks like we're getting that last little bounce here. And I was just playing around with some things on. Really, I think we could come down a little bit lower first before we get that bigger bounce. The liquidation engines are out, and you're going to see some up, down, sideways. But overall, the trend is down. And when I say higher term time frames are taking over, so the 2-day will cross down in another. I can't believe we're crossed up still on on CMEs. What's the 3-day say? The 3 days down, and the 5-day did cross down back here. We had noted that typically a 5-day volatility expansion above the 20 percentile, which will be closing another 1 day and 3 hours. So coming up on Wednesday, I think a lot of things are going to happen in the markets. And, you know, if he comes out and says 50 basis points, I think the market could pump. Certainly, but I think really these trends are already in place. And the average move, I believe, on a 5-day volatility expansion, momentum to the downside, is about 45 to 50%. And the last two have been pretty significant. Let's just measure them out real quick. So as I'll just denote where the signal actually went off right here. And the one prior to that one wasn't as good on CME, as volatility didn't begin really to expand until right there. But it was already quite high, and momentum had crossed to the downside, and that's kind of the main thing you want to look for is that cross down and low volatility. But just measuring this out here from high to low, that was 47%, and this guy was 54%. So if we get anything reminiscent to that, somewhere around 45 to 50% from this guy right here, where it crossed down, 45% puts us at 11.5 for CMEs, and I do believe spot price will probably carry on over from there. And usually these moves will take around 35 days, something like that. So we are, 15 days in, about halfway in, and I do imagine certainly if we close a 5-day below this wick, that'll be, good indicator. Party is on to the downside. what else did we have last week? Almost a bearish engulfing candle, not quite there. We did get a little bit of a follow through here this morning. The weekly is also down and is just above 20%. Really, you want to see this regain the exponential, and that would give us the signal. And 50% down on the weekly time frame is pretty regular. 50% drops, no big deal, right? So 50%, 52% down, or sorry, 50% down gets you around $9,000. Typically, if you are going for one of these bigger moves, again, it's not financial advice, I'm not a financial advisor, you want to wait for a closure below the prior wick, which is something like this. And then you want to front run the signal and take profits early, not wait to the very tippy bottom, because I'll let you know something. There is only one person who gets the very bottom and one person who gets the top. So these are the things on the board. I do want to check in on the spot price. So again, almost a bearish engulfing candle. And where does this all get invalidated? Well, as long as we're below 20,500 on the weekly, 20,400 and 20,098 on the 5-day, which we got another 3 days and 6 hours. And here's something else I really noticed over the weekend is we've been getting basically the 1, 2, 3 pumps, multiple pumps, multiple red candles to the downside. We just got a backfill on the 12-hour. Which is nice for spot price. And we are crossing down below 18.8 or 18.7. So it needs to have pretty much a full retrace there. We got another 5 hours left. The 4-hour, what does the 4-hour say? So getting rejected at the 9. We did make that perfect little cup and came up and tested the last breakdown level. Do I think it has room to test it one more time? Perhaps, yes. Volatility is low, and we are crossing up here in the next hour and 10 minutes as long as Bitcoin is above 18,680. So crossing up from a low level could certainly benefit Bitcoin. Now, do we have any divergences playing out? And I'm sure we do, in fact, coming back from this point, you'd have 1, 2, 3, which again, typically gives you a shot to the top side of the range. Could get a bounce as high as $20,000. But I don't think that's necessarily in the cards right now. I think 19.5 is a little bit more likely. And what else did I want to point out? So NASDAQ also fighting for its life here. After last week's, and again, NASDAQ could bounce to 12.1, maybe up to the 9 there. So if NASDAQ does begin to rally, that'd be a good indicator that perhaps Bitcoin puts in a little bit of a bounce ahead of Wednesday's meeting. And also, yeah, there is a gap there I mentioned on the 4-hour time frame, coming in right there at 19.5. Why aren't I seeing it right now? Maybe it's on the hourly. There it is. On the hourly time frame, there is this little gap between 19.5 and 19.575. That was over the weekend, gap down, big price action down over the weekend. And that's why you can't really trust that weekend price action, because it typically, there's like a mean reversion coming in on Monday. The futures market likes to test any past prior price action and really kind of test whether it's valid or not. Something with Ethereum, I did want to point out there is a nice little gap coming in at about $14,000. I could see that getting tested, especially with a 4-hour closure back above 1368. I believe that'll be a major pivot on the market at least for the short term. Right now, it looks like we tested the gap and got rejected. So wasn't a gap fill. Got to get up to 14,000 bucks. But other than that, yeah, the 4-hour time frame looks like that move is over for the moment. We want to see volatility reset and then expansion from there. So what do I think is most likely to happen from here, guys? And again, not financial advice. I'm not a financial advisor, but if you had to put a gun to my head and say, what's going to happen now, Chris, with Ethereum? I think Ethereum probably comes down to about 1307 and then goes for that gap fill. That'd be a $100 move, somewhere up to about 1,400 bucks. And on the 4-hour time frame, that is right here. Yeah, at the yellow 21. So what does it do? Everybody comes in on Monday, goes, oh no, I'm going to sell. Look at all these red candles on the 4-hour. And they sell, and then the market throws it in their face. They get liquidated. And then people go, oh, I'm going to get long here. And then what does it do? It throws it back down. And then everybody goes, oh, I'm going to get short. And then the market throws it back up one more time. And that would be my guess, because the market likes to take everybody's money. And if you don't have a plan or investment strategy, typically that's what ends up getting taken from you. And I'll be the first one to say, boy, the market has taken a lot of my money over the years, but now, you know, I get to be on the other side. So what else is going on? I think that's it for today, guys. So the higher term timeframes, Bitcoin rules the market. Whatever Bitcoin does, Ethereum and all the other coins are going to do more. And because the 2-day will close, if we see the 2-day cross down and volatility begin to expand, I would estimate a 25% move to the downside. Now, could we rally $700 in the next 4 hours? Perhaps, yes, but I don't think that we likely close above that level. I don't think that is the most likely case at the moment. So that's where invalidation would start to come in for the 2-day time frame, the 2-day signal. So what is the opposite side of the 2-day signal? Well, Stokes are up and volatility begins to expand above the exponential here, above 20%. That would probably be good for a 25% move to the upside, which, let's see, 25% in either direction. Oh, what do you know? Right up to the green box of peace and prosperity or death and despair. To the downside, 25% is going to be coming in. Oh, it's probably around that 16.5. No, it's a little bit lower. 25% to the downside would be right there. Let's see if that lines up with any fibs, because this massive consolidation, we've been sitting here for months waiting for it. And that's right at 15,000 bucks. So as I put out on that short video on Instagram just a few days ago, 6 days ago, in fact, any kind of a 4-hour closure below 18.5 very likely gets us a move at least to 16.5. And I'm willing to bet that is based on this retracement right here. Maybe using Wix. Let's see. Yep. Call it 16,000 bucks. So a 4-hour below there, very likely going to head down to 16.5 at a minimum, and then we will judge it from there. But do be aware, this is the month of September. We're about halfway through. We're about to get the interest rate hike. It's about to be a bloodbath, in my opinion. Again, not financial advice, not a financial advisor, and we are still in a massive daily, weekly downtrend for the NASDAQ. And, oh, last but not least, the US dollar. How did the week close? Almost a bullish engulfing candle. We went over this actually on, and I may have drawn this out wrong because, well, we didn't, yeah, we just got the 4-hour closure above, and now we're getting the retest, but we did break the trend line back down. We broke the trend line back below, so this kind of little bit worrisome for the dollar. So dollar goes up, markets go down, and maybe this is more accurately drawn, something like that, more of a bear flag instead of a descending triangle. But the expansion off of this move, I do believe, is going to get it. So are we above 20 percentile yet? Not even close. So we want to see above 20 percentile for the dollar. And that's going to give us probably the next major move. I think we're leaning towards the upside. Let the trend be your friend till the end of the trend. Now I'm talking about the daily, the weekly, the monthly. Bitcoin has been trending hard to the upside. And I'll just show you right there. So let that trend be your friend. And what else? What else? Is that it for today, guys? I think that's it. Hope you have a blessed and highly favored day. Hope you enjoyed. Don't forget, like the video if you enjoyed it. Post a comment if you have a question. And subscribe to the channel. Take care.